Russia reopens bond market to foreign investors from non-hostile countries. It has now been almost 6 months since Russia invaded Ukraine. Many Western countries responded to an invasion with severe sanctions, which are still ongoing. Russia, too, isolated itself from a large part of the international community. Now, under the leadership of President Putin, the country is reopening the bond market for foreign investors with restrictions. The war with Ukraine that Russia started is still raging, and the country led by President Putin sent its troops to Ukraine in February. Numerous Western countries reacted with severe sanctions, which are still in force. The EU supposed several packages of sanctions affecting individuals, economy and diplomatic measures to counter Russian activities with severe consequences. In addition, it should be more difficult for Russia to continue its aggression against Ukraine. Moscow Stock Exchange reopens Russian bond market for non-hostile countries. Russia, for its part, responds with its own measure. The country closed its markets in February to prevent capital from flowing out during the war. Now, however, the Russian Federation wants to open up again. In a recent press release, the Moscow Stock Exchange announced that the Russian bond market would reopen to non-resident clients from non-hostile countries and non-resident persons who ultimate beneficiaries are Russian legal entities or individuals. In addition, the exchange announced that banks, brokerages, and management companies had started registration of their foreign customers. Among the hostile states of Russia, the Federation counts numerous EU member states as well as Canada and Japan. Countries which, according to BBC News, account for 90% of investments in Russia last year. As the news channel suspects, the accepted countries could have included Turkey and China, as they have not yet imposed sanctions on Russia. Russian economy shrinks in second quarter. Steps toward increased opening could be due to the fact that the Russian economy contracted significantly in the second quarter of 2022. The gross domestic product from April to June fell by 4% compared to the same quarter for the previous year. However, this is less than what the economics expected in advance. Nevertheless, economic output fell back to the level of 2018 in the second quarter. The Russian Central Bank expected the economy to contract by 7% in the third quarter. Wall Street banks dare to return. As the Reuters news agency reports, various Wall Street banks have already begun a cautious return to the Russian bond market in the past few days. The agency learned from documents it had at its disposal, all this within the framework of sanctions that are still in force. With this step, the financial house wants to give investors the opportunity to sell Russian assets, which are now viewed as toxic in the West. Before the start of the Ukraine war, the Russian Federation had around 40 billion worth of government bonds outstanding, about half of which was held by foreign funds, Reuters and reports. With Russia's invasion of Ukraine and the sanctions that followed, many investors no longer had the opportunity to get rid of their investment, which lost value within a very short time. For this reason, the US Treasury Department, as well as European authorities, have now taken steps to allow banks to conduct transactions in Russia without violating sanctions. Returning banks include Jefferies, Barclays, Deutsche Bank, Bank of America, and JP Morgan, according to Reuters. However, returning to Russia bond market is complicated even for financial professionals. A Jefferies spokesman told Reuters that the bank was working within global sanctions guidelines to facilitate how customers need to navigate his complicated situation. What do you think?